if you are anyone who's looking to start, now is definitely a good time, because you have a lot less noise to deal with and you can focus a lot more quicker.
Web3 is not only a growing space, but essentially a transition from an entire centralized traditional business model to a technologically robust and decentralized infrastructure. With ever-increasing numbers of layer ones, DeFi protocols, NFT collections, applications, and middleware, Web3 has seen exponential growth in institutional fund inflows in recent times. With all the speculation and generous valuations, there is definitely a lot to mystify. To talk about digital assets and his journey so far, we have Himanshu Yadav with us today. Himanshu is a founding partner and CIO at Woodstock Fund. Started in early 2019, Woodstock Fund is one of the oldest and largest Web3 focused venture capital firms out of India. They have made investments in 65 plus early stage startups across infrastructure, DeFi, NFTs, and more. Some of their notable investments have been in Alron, Bioeconomy, Covalent, Holoride, and a lot more. Welcome to CuratedX, Himanshu. We're truly stoked to have you with us today.
Thank you. Thank you for having me, Chavi. And congratulations on getting started with Curated. I think we always discuss education as one of the biggest gaps that exist in the space, and the way you're trying to break it down and simplify it for new users, I think will go a long way.
Thank you. Great. Let's kick things off by maybe knowing a little bit about your journey. What led you to venture into the crypto space? What stage is the fund currently at? And also just an add on to it, I'm curious to know, why did you name it as Woodstock?
Okay, multiple questions there. So I'll start with my journey. So my background is in maths and engineering, and I've always been very fascinated about startups, ideas, business, entrepreneurship side of things. So right after college, I started my own startup in Bangalore in India, worked on that for about 3-4 years. Then I started working on another couple of companies in the solar energy, renewable energy domain. So one is a EPC company, one is a power production company. So worked on that for a few years, and I essentially I thought that was the career direction and the path I will be on. But as life throws different situations at you at times, I got introduced to Ethereum in 2017 through one of my family friends. Who was mining Ethereum in his basement at the time. And I was quite curious. I started reading about the space, and pretty much within the next month or two, went down the rabbit hole and realized how big of an impact this technology is going to have across all the different sectors and other emerging technologies. So started with personal angel investments in the space in 2017. Then the whole, the market crashed in 2018, which, in hindsight was quite good, because that gave a lot of time to really, study the whole space, understand how this whole architecture and the tech stack is shaping up, how to identify good investments in the space, and, break it down. What is the best due diligence process to have in the space, etc. So formed, essentially our thesis, internal processes during those 1.5 years. And then finally in early 2019, I met Pranav, who's my partner, another founding partner, and we decided to, go on the fund journey, because that was a time when really no serious traditional Web2 fund was, looking at this space, right? Most of them had probably written it off as a speculative asset class, and which was quite surprising to us, to be honest. And also, it presented a massive opportunity that there is going to be a huge gap, especially when it comes to India and Asia region in terms of, how will the venture capital in the story in the Web3 space shape up, right? And how can we really try to anchor that side of things? So we started with Fund 1 journey at that time, and because none of us come from traditional fund backgrounds, so we deliberately kept it small, wanted to test out the thesis that we are building. So focused on few early stage investments. And that was the time when was layer 1 protocols was still a lot of debate around how layer 1 in itself will scale. So there were quite a few opportunities there, and across the middleware layer, your indexing, Oracle layers, etc. So started with investments across that part of the stack and waited to see how that pans out over the next year or so. And then finally, when we started seeing those layer matures and the application layer really starting to pick up is when we started to make investments across decentralized finance, NFTs, and those categories, right? So yeah, the journey with the fund started in early 2019. Our first fund has been investing actively in early stage projects in the Web3 space for the last three plus years now. And we have recently launched our Fund 2 as well. And Fund 2 is focused more towards your mid-market, early growth stage kind of opportunities. So like your Series A, Series B sort of rounds. So we're pretty much, covering the spectrum from pre-seed to your Series B sort of investment rounds right now in this space.
Got it. The last bit now, why Woodstock and not any other name?
So two aspects. One is Woodstock, if you remember the music festival that happened in 1969, that in itself, turned into a whole movement where it was all about expression and freedom, which, resonate very well with the ethos of the Web3 and the blockchain space, right? So that name in itself felt like a perfect fit. And coincidentally, when we were launching the fund in 2019, that was also the 50th anniversary of the Woodstock Music Festival. So, there was sort of some signs which the universe was providing that is probably a good name. And also slightly personal element to it as well. So when I was in college, we used to have this decentralized software to connect, where all students used to connect, have chats, exchange files, etc. So the hub that I used to host at that time was also, called Woodstock. So I've had that association with the name, since that time, and it seemed like a perfect fit coming into the blockchain and the Web3 space. So that's why we decided to name it Woodstock.
That's interesting. I think the journey has really been interesting as to how you changed paths at the right time, picking up those opportunities that came your way, and then leading to something that you really wanted to do out of passion. So also, Himanshu, when you start your entrepreneurial journey, right, you're practically alone in that journey where very few people trust you with the venture. But as you grow, there are multiple minds and hearts out there who are now fully involved in growing that business. And then you grow as a team. And at that time, I think you really need on all hands on deck. So specifically in this volatile world where there is so much happening every time, every second practically as we speak. So in this round the clock market, how do you keep yourself updated with the happenings, ensure that your team is motivated and the fund is on the right path?
Yeah, so I completely agree. I think when you are just starting off your entrepreneurship journey or becoming a founder for the first time, it is definitely a lonely job, right? You need to figure out a lot of things on the go, because that's something that you have not experienced before or tried your hand before, right? You might have some experience of it if you have worked in a very small startup team, etc. But yeah, still being a founder and involves you wearing multiple hats, right? So it does get lonely. The good thing about, I think, especially about Web3 and blockchain spaces, it's very open, warm, and welcoming, right? So the whole nature and ethos of the space is open source. People really encourage and share their knowledge very openly with anyone who's coming in, even from the outside, who does not have any knowledge or experience about the space. So that, I think, really helps accelerate anyone's entry, so to say, in the space, right? Because you have people who are always ready to extend you a helping hand. And there are lots of channels to really get started easily across the space, right? The first, there are this Twitter, Telegram, YouTube channels, and you have these communities formed across all these different mediums where people are just talking, bouncing off ideas, learning from each other, etc., right? And the biggest motivation, I think, for us and even for anyone in our team, it's just the fact that it doesn't really feel like work, right? The best part about, I think, being a VC is you get the privilege of talking to the best founders and the smartest minds around the world, right? And just by doing that, every single time you have a good conversation, you feel motivated in terms of, a new idea or use case which someone is working on. And they have put so much thought into it and you learn so much from it, right? So I think more than the work, it really feels like something that you love doing and enjoying. And as if you really find something, that fits in that bucket, then everything else becomes really easy, right? Then it's sort of a self motivation that keeps happening in the space. So, and I think at least I would say we have been able to build a team of really some smart people around us who really love what they do, right? And most of them don't even take leaves, etc., because you take a leave for 2 days, it's like you have missed out on so many things that have happened in crypto and Web3 within those 2 days, right? So it's just like there's nothing else we would rather be doing. So I think it's very important to find something like that, whatever it is for you as an individual. And once you do that, then it's not about work anymore. It's about everyday life that you go about.
Very true, very true. I think this new phase that we're getting into with so many people who are not taking it personally as work, but jumping into this space out of an interest to understand what's happening, that's the sole motivating driver for each individual to consider it not really as a work, but to understand this space in deep and to get their face out there. So really interesting to hear that. Also, like it goes, right? When you're a founder, your journey in the beginning, I'm sure, is a rocky ride with its ups and downs. And there are multiple challenges that one keeps facing. Specifically, it could be when people trust you with their money, or the markets are volatile, they're going haywire, or even the growing competition in the market, and a lot more. So, what have been some of these roadblocks that you faced in growing the fund, and how have you stood the test of time?
So I think when things have definitely changed now, but when we started the fund journey, we're talking about early 2019, like depth of the previous bear market, right? And that time, most of the investors were still in that mindset that, crypto was completely speculative asset class, which has like already had its day. And now it's crashed like 80-90%. It's never coming back, etc. So at that time, I think the conversations used to be quite lengthy in terms of helping some of the investors understand, this is what's happening behind the scenes in terms of what is being built and how that will enable the future application layer built on top of it, right? So those were some initial roadblocks, I would say, that we had to face in the first year or two of our journey. But now things have definitely changed, because now it's like crypto has gone from 3 years back, it was like a speculative asset class, and the thinking was I'll invest a bit and see what happens, if at all, right? To now becoming a part of your alternate asset allocation strategy for any serious investor out there, right? So I think that mindset shift has already happened across the board, which is why we are also seeing a lot of the traditional Web2 funds really, starting to get aggressive across their Web3 and the crypto strategies as well. So those were some initial, I think, hurdles, etc. And I think what has helped us, sort of navigate through the space, even during the crazy bull market that we have seen over the last 12 to 18 months, and a lot of noise and froth comes into the space, whenever that happens in a market cycle, is just trying to stick to the discipline and sticking to our due diligence process, the internal thesis we have, staying grounded helps filter out a lot of the noise, right? So I think it's very important to stick to that and not get carried away.
Definitely. So picking up on that, the things that you mentioned, having that thesis, doing the due diligence. So I understand being an early stage fund, it is very important to put substantial time and energy in evaluating businesses from all perspectives, right? Be it the tokenomics, founders, the growth potential, the very product or the solution that a specific project or a protocol is coming up with. And also, like you mentioned, right, how you're differentiating fund one and fund two investments as well. So what is your secret to identifying those high potential projects at such an early stage? Is there essentially a method to this madness?
I would say the short answer is no. And that's why I think they say investing is more of an art rather than a science, right? If there was a method, it would have been a science. So there is no particular method to the madness, but there are definitely some basic guidelines or principles you can follow, which can help you at least identify some good investments or something on that direction, right? When we talk about very early stage investments, it's usually your pre-product, pre-traction sort of investment category, right? Where you are primarily betting on the founders and the idea that they have. So it really comes down to founders at your pre-seed, seed round sort of investments. Who are the founders? Are they in it for the right reasons? Do they have the experience, the credibility, the skill set, and the vision to like build and scale up a company, build a team of the most talented individuals around them? Because founders can only do so much, right? After a few months, it becomes who is your core team? How have you been able to attract the best talent, etc. So I think for very early stage investments, founders and the team is probably the biggest factor to look at. Apart from that, so internally also we have this what we call the 5Ts matrix. So out of that team, one T is the team. So team is the most important, and then you have technology, traction, total addressable market, and the timing. So it's sort of a combination that we try to look at. Out of these 5Ts, are we seeing a confluence across all the 5 or as many T's as possible, right? Which could help us get the sense that this is something that it's worth investing on and probably working with them and building with them.
Understood. I think truly an art, like you said, because that's how one VC differentiates itself from the other in terms of how do you evaluate things differently and then put your bets on them. So I also understand that a VC is like in the middle of two key stakeholders, right? On one side, you have your LPs who entrust you with their money with the objective that you would give them massive returns. And then you have the investee companies who work on growing these investments. So do you think it is a very relationship-driven business and sometimes it is difficult to match expectations?
Definitely is, especially in a space as volatile as Web3 and crypto, because you have this massive market cycles, etc. And when it comes to your LPs, most of them, have other things that they are busy and caught up with. They are not really into this market 100% of the time like we are, right? So obviously they will not have the full context or might not understand why there is so much volatility and why things happen in a certain way in the space, right? And that is where sort of communication becomes really important. So where we because eventually they have trusted us with their hard-earned money, right? And it's our responsibility and duty to ensure that we communicate with them the right way. If they have questions, we are available to answer, etc. So that does become very important. So at our end, we try to do frequent AMAs, AMA sessions with our LPs. There's newsletters that go out regularly. We are always available with them to have a call if they have any specific questions. There's a dedicated investor relations team that works on that. So it is keeping the communication with the LPs is very important. Not only to ensure that they have the right understanding of what we are doing as a fund. It's if they have a good understanding, they also at times add a lot of value, right? Because they come from different experience and background. So we bounce off a lot of ideas with them. They sometimes share about other good projects or deal flows with us, right? Or we just discuss about the macro situation and the whole across the overall markets, not only in crypto markets. So it's very important to have that communication going with some of the successful people out there, right?
Absolutely. And moving on to the investee company side now. So in the current market scenario, right, where there is a lot of capital free flowing, which may have reduced, I understand, in the recent times, considering the market trends, but how do you see the VC space evolving over time? I mean, how do you see VCs positioned and maybe as strategic investors rather than just a means of financial support in the coming years?
So there are two parts to it. One, I think we're talking about the general trend. A general trend that we have been seeing across the VC space is moving away from being only capital providers to actually being your value add investors, right? So how much value can you really provide to the portfolio company? And it can be across different areas, right? Can you help them with hiring the best talent? Can you help them advise? Can you help advise them on their technology side of things? Can you help them get advice on their token economic side of things? If it's a token that they are potentially working on that fits their use case. And can you give them feedback on their product? Can you be their users? Can you connect them with other users? Can you help them build a community, etc.? And more and more of what we are seeing is good teams and good founders never have shortage of capital, right? So for them, it becomes really important. Okay, who is going to work with me and who is going to provide the best value to me in this journey apart from the capital, right? So that's a general trend that we are seeing, and that I think all the VCs have to sort of adapt to and be very cognizant of if they want to remain relevant in this space. Now, the second part of the question was more about how the current market is right now, and especially given the macro concerns, geopolitical situation around the war, and the Federal Reserve tightening the policies to curb the inflation, etc. There are definite concerns across the board that there is a possibility of a very real slowdown across the capital markets, and the capital drying up a bit. I think all the investors are aware of that potential scenario playing out, and if that does happen, everyone should expect the capital to dry up and not be as easily available as it was over the last 12 to 24 months, right? And that is where the founders, the teams, and the projects have to be really smart about how they go about their business over the next 2 to 3 years, because things might get difficult in terms of raising new capital. So you have to be very efficient and prudent about your runway, how you manage your costs, how you build your team, how you manage your revenues, and how you try to become self-sustainable as soon as possible, or ensure that if you are in the process of fundraising, how can you try to close it quickly and get some good capital and good partners in at that time, right? So those macro concerns are definitely there. How that plays out, I think if anyone says they know exactly how it's going to play out, they're probably they don't know what they're talking about, because no one really knows how these things play out when it comes to the macro environments.
Definitely. No, very true. Actually, it depends on how you've set up, how strong you are in these testing times, that showcases the kind of commitment you have or the kind of actual product that you've built, that you're able to pass through these bear markets as well. So just circling back to the point that you mentioned, right, where you spoke of these different communities that you can be part of, or basically just starting off with Twitter, Telegram, or all of these places to learn. So there's over time, we've seen a lot of people in India as well, right? If we see are wanting to explore the digital asset space, but there is always some level of hesitation in jumping into this unexplored market. So what message would you like to give to people who would want to transition into Web3? What steps and paths should they follow to start their journey?
Interesting question. Yeah. So I think you just have to first make up your mind and jump into it right away, right? There's no way you are going to learn about this space, especially a space which is moving this fast, unless you really take the decision of, no, I want to spend the next 3 months or 6 months really trying to figure what's happening in the space and understand what's happening in the space, right? Because otherwise it will get too overwhelming for you to really try to understand and decode the space. So just make that decision first and foremost. After that, as I said, people are very warm, open, and welcoming in the space. Go out, attend some Web3 meetups, conferences, meet with people, exchange ideas, surround yourself with the best people, follow the smartest minds in the space on Twitter, get your news feed going so that you are getting updated with what's happening in the space, and you are learning more things by keeping yourself up to date. Join the community channels, discussion groups over Telegram. Again, follow some really good news publications across your websites like Cointelegraph, Coindesk, on YouTube, etc. as well. There are some really good channels to consume some good content and market updates. So just immerse yourself first. I think probably that's what you should do for the first month or two. And once you start to really be in the middle of what's happening in the space and all the updates that are coming to you, then it's about really trying to start understanding, okay, how is this whole technology stack shaping up, right? And it's fairly easy on a broad level. You have your underlying layer one protocols, which are your settlement layers, then you have your middleware layers, then you have your application layer. So always start from the bottom, understand what Bitcoin and Ethereum are about, what are some of the other layer one protocols that are building the bottommost layer, why do we need a middleware layer on top of it, what does middleware layer do, and then finally what are the different categories of applications layer and what are the different types of applications they are building, right? So that's where you have your decentralized finance, non-fungible tokens, gaming, and all these category of applications that are sitting. So start with the bottom layer and go up if you want to really read up and learn about this space. And that's how you'll probably start to build a good idea of, okay, this is how the whole stack is shaping up, and then try to find, okay, which problem or the use case really excites you that you want to dive further into and work on.
Definitely. I think that's really a useful piece of advice, because a lot of the people, they get stuck in that rabbit hole of, okay, where do we start from? What is this? What is that? But that's you take a bigger picture at hand, and then you get started from the bottom, going up to see what's happening where. So before we wrap up, one last thing. So there's so much happening with regards to different kinds of projects, be it in the metaverse, DeFi lending, gaming, or even a combination of these. Every project is aiming to have that differentiating factor which makes them stand out. So what is that one idea you feel could become a reality, leveraging the blockchain technology, maybe by the end of this decade?
One idea. So I think instead of looking at it, looking at blockchain as sort of coming up with one idea, I look as this technology is more of an enabler, which is going to cut across all the different other emerging technologies, right? So there's no particular out of the way idea that I think blockchain will enable in itself. There's just that how it will enable much more efficient business models across all of the other emerging technologies, right? So one simple example, can be, let's say we have already had these music streaming, video streaming platforms, right? Spotify, YouTube, etc. But we have seen a massive concentration with centralized parties across those platforms, where they are the ones who are making money and your end users and artists are not really making any money, right? But that is going to change with the help of blockchain, right? So you have simple example on that side. Similarly, you have example, let's say even on browsers, we have been used to, most of the people are used to using Google Chrome. Now, at least even internally, and a lot of people in the space use this new Brave browser, right? And it is much more efficient because you can control the ads. If you want to see the ads, you actually get paid to see the ads, right? Instead of being on the other side of the spectrum where you are just being shown ads, but here you're opting in and actually, you are able to monetize based on the preferences that you have and how you control your data. So it has enabled a much more efficient business model just across the browsers category as well, right? So I look at blockchain as an enabler which is going to cut across all the other emerging technologies, because it's going to provide a financial layer which does not require any middlemen, right? You are able to find and interact and transfer value to other peers directly. So you don't need to rely on someone sitting in the middle and taking huge percentage commissions or cuts out of it. And that efficient business models are going to have effects across all the other emerging technology layers, right? So I'm more interested in, okay, how are we enabling that across the entire stack of other technologies rather than one particular, sort of idea which blockchain in itself will work on.
Definitely makes a lot of sense, looking at the larger picture of things and how it's going to transform a lot of the other things as well, rather than just one thing that it would end up with. Great. So I think, thank you so much. It's been an enriching conversation. The space is vast and you do end up in a rabbit hole as you explore more and more, but working with a vision, with an utmost conviction and an aim to take the fund to greater heights is definitely a lesson to be learned from you. Again, thank you so much for being a part and for sharing a lot of these insights with us. It's really, really very useful piece of advice that you've shared. Thank you so much.
Thank you for having me. And actually, to start, I would say now is probably a good time to start, because now we are, things are much more quieter than they were 6 months back. So if you were getting started 6 months back, you will probably be a lot more overwhelmed. But now things have, calmed down a bit. So it's much easier to navigate through the space and, really try to put your foot down. So I think if you are anyone who's looking to start, now is definitely a good time, because you have a lot less noise to deal with and you can focus a lot more quicker.
Again, I'd like to thank you so much for coming and talking to us. Thank you so much.
Thank you.